Imagine you are walking into a crowded marketplace, buyers and sellers shouting, negotiating, and trading goods. But instead of fruits or clothes, they are trading stocks. Now you might be wondering, what's all this buzz about option trading in the stock market? And how can you be a part of it? Let's take a step back first. Let's talk about stocks. When you buy a stock, you are buying a small piece of a company, right? You hope that the price will go up so you can sell it for a profit. But here is where option trading comes in. Think of it as a shortcut or a special ticket to profit without actually owning a stock. Sounds interesting? Let me explain. What exactly are options? An option is like a right or ticket. It gives you the right but not the obligation to buy or sell a stock at a specific price on or before a certain date. It's like booking a concert ticket. You pay a little now for the option to attend a concert later. If you choose not to go, you lose the ticket cost, but you don't lose anything more. Now, there are two types of options, call options and put options. A call option gives you the right to buy the stock at a particular price. A put option gives you the right to sell the stock at a specific price. Here is where it gets fun. Let's use a real example. Imagine Reliance Industries stock is trading at 2000 and you believe the stock price will rise. You buy a call option that allows you to buy Reliance shares at 12,100 in a month. If stock rises to 2,300, how do options work in the Indian market? In Indian stock market, options are mostly traded on major indices like Nifty 50 or individual stocks like Tata Motors, Infosys or HDFC Bank. The National Stock Exchange or NSE is where all of this happens. Let's talk about a practical example with Nifty. The Nifty 50 index is like a basket of 50 of India's biggest companies. Let's say Nifty is at 18,000 points today and you believe it will go up. You buy a call option with a strike price of 18,200 which expire in 2 weeks. If the Nifty rises to 18,400, you can exercise your call option and make a profit. However, if the index falls, your option becomes worthless. The risk is limited to the price you paid for the option, called the premium. A risk versus reward in option trading. One of the key reasons traders love option is the potential for high returns. But like any good opportunity, it comes with risks. Let's take an example. You are buying a call option for a stock at 2000, paying a premium of 100. If the stock jumps to 2200, you can exercise the option, buy the stock at 2000 and sell it at 2200, making 200 minus the 100 premium you paid. So a 100 investment could give you a 100 profit. But what happens if the stock price doesn't rise? What if it falls? You lose your 100 premium. That's the maximum loss you can face. Unlike buying stocks where your losses can be much greater than if the stock crashes. Options trading gives you the ability to profit with limited risk, but the possibility of high rewards. But remember, the risk is always there, and you can lose your premium if things don't go your way. For practical example, the power of option trading. Let me share a real life example that will help you understand how powerful options can be. Let's talk about Nifty again. Imagine you predict that the Nifty 50 will rise from 18,000 to 18,500 in a month. You decide to buy a call option at a strike price of 18,200. you pay a premium of 150. Now, if Nifty rises as you expect, let's say it reaches 18,600, you can exercise your option and buy the Nifty at 18,200. That's a 400 gain per contract. But here is the twist. Options are not like stocks. You can sell the option itself before expiry. If the Nifty rises quickly, the price of your option might also rise. You can sell it for a profit without actually having to buy or sell the underlying stock. This ability to trade options in and out before expiry can make options trading even more exciting. But of course, you have to keep an eye on the time. You don't want your options to expire worthless. 5. Conclusion. Should you try option trading? So, should you jump into options trading in the Indian stock market? It's definitely tempting. With the potential for high returns, it can be an exciting way to participate in the market without having to buy stocks directly. But remember, this is not a game. It's important to understand the risks and learn the strategies that can help you minimize losses. Start small, practice with paper trading, and only risk money you can afford to lose. Always keep in mind that options are powerful tools, but they require knowledge, patience, and strategy. If you decide to dive in, don't just follow tips from random traders. Educate yourself, stay updated, and make informed decisions. And remember, as with any investment, there are no guarantees. It's all about managing your risk and making smart moves. Options trading in the Indian stock market might seem complicated at first, but with practice and knowledge, you can make it work for you. Keep learning, stay curious, and always trade responsibly. Until next time, happy trading.